state where college graduates won't get job, companies don't get required skill set at affordable prices. And at the end, investors like us don't get any return. When they can automate, why even think of hiring and keeping the workforce? This shows economy is not expanding but contracting because there is a weak government spending. There is a weak household spending. That is the reason why many central banks have decided to pile up the gold reserve than keeping entire national reserve in USD because they are clueless when the bubble will burst. Fed won't be in a position to reduce interest rate. This will impact your housing loan, your EMI, any kind of loan that you are having. Hello everyone, welcome to Keerthi's FinFo NRI community. I am CS Keerthana. I live in Dubai. I run the consultancy, a firm which is specialized in NRI services. I've done my CS from India and CIMA strategic level from UK. I'm also a SEBI registered overseas MFT. Every week I bring and explain a video on the topics related to NRI issues in this channel. If you're looking for anything related to FEMA, tax, investment, topics related to NRIs, please subscribe this channel. In this video, we are going to discuss broadly what is recession and is the U.S economy slipping into recession, why it affects NRIs across the globe, and how they need to prepare to handle it. This video is brought to you by The Consultancy, an initiative of Keerthi's FinFo channel that you're watching now. The Consultancy is specialized in NRI taxation and investing. If you're looking to invest in Indian markets, we can help you. You can book an appointment for 20 minutes free consultation using the link available in our website www.keerthisfinfo.com or using the link available in the description below. If you're ready to dig into US economy, then let's start. First, what is recession and what are the indicators? See, there is no universal definition. If GDP or gross domestic product contracts for consecutive 2 quarters in an economy, then that country is said to be in recession. This is not actually any official textbook definition, but what we have been accepting so far. Recently, due to the drop in consumer spending, Japan as well as UK, they have fallen into recession. Look at this data published by OECD. This chart shows the GDP for 2022, which is in orange color, 2023 GDP is in green, and 2024 GDP is in blue color. Compared to 2022, economies around the world shrank significantly in 2023, and 2024 there is slight recovery, but overall growth appears to be very sluggish. Why is it so? Let us look at the indicators one by one to know if at all US economy is going to enter into delayed recession or already it is in recession. First point, unemployment rate. This is the most important factor because it has domino effect or knock-on impact on the economy. Let me explain what is domino effect. It is simple. See here, one block will catch the momentum and it goes on knocking down the next blocks in the line. Recession is also a matter of this effect because here one interconnected factor will pick the momentum and all the rest of the indicators will be knocked down and the momentum will stop only once the economy shrinks. See, obviously, if the employment rate reduces, consumption in economy also goes down, pushing the demand and the corporate earning of the company is also down. It is a state where college graduates won't get job, companies don't get required skill set at affordable prices. And at the end, investors like us don't get any return because yield from all the asset classes in an economy reduces if the demand slumps. Almost all the industries suffer because see, even in case of financial institutions or banks, they will see loan defaults, not the deposits. Leave all the discretionary spending themes in an economy. Did you ever think if someone is hiring, training, and why even they are thinking of laying off unless it is a matter of survival to the companies? See, in US, many giant companies started reducing the workforce right from Google, Apple, Amazon, UPS until the job cuts in Tesla happened recently. The tech industry alone has witnessed 42,000 layoffs in early 2024. Maybe artificial intelligence is to be blamed because see, companies don't get free capital if the labor cost is not minimized. When they can automate, why even think of hiring and keeping the workforce? And they also have to offer the products at competitive price, and Investment to develop AI models may be huge. But what happens when such layoffs happen in an economy? Domino effect. See, it's not limited to tech. Many media finance companies also had done their job cuts. So what about the government data then? In 2024 March, the unemployment rate had decreased to 3.8% from 3.9%. That is a difference of 0.1% down in 2 months. Since 2023, though Federal Reserve had been aggressively hiking the interest rate, unemployment rate according to the government stood between 3.7 to 3.9%. This is the official data. But the truth is, if layoffs continue, it definitely affects the consumption. And if this continues, there will be joblessness touching 4%. Is it a good thing for economy? How a business or a company can raise the price or pass on its cost if people are so conscious about the price or people don't have money? They will have tough time in passing their cost to the end user or consumers. Otherwise, why companies who are spending so much on hiring training have decided to go for this cost cutting mode? It should have become existential crisis even for them. This is about employment rate. Let's move on to the second factor, GDP, gross domestic product. This is the value of all goods and services that an economy or country has produced in a particular time frame. This is also a very important factor. And what is happening in US? US economy has expanded by 1.6% in the first 3 months of 2024, and this rate was 3.4% in the previous quarter. This shows economy is not expanding but contracting because there is a weak government spending. There is a weak household spending. Fed has increased the interest rate more than 11 times in the past 2 years. So, for the business to invest in them, families to borrow, the capital had dried up. Let's look at third indicator, yield curve inversion. US yield curve inversion has become the longest in the history. Means recession threats are still in the corner. See, yield curve inversion is a state where short-term yield is more than the long-term yield in case of bonds. It has started in early 2022 in US and still continuing. If you're still thinking and confused what this inversion curve of the yield is, let me explain. It is a contrast state where, for accepting the longer duration and the risk, adequate compensation is not given to the long-term bondholder. There is more demand and more return for the short-term bondholder. Why? Because there is no enough clarity on what might happen on the long term. So there is no demand for the long-term bonds, and also the central bank or the Federal Reserve in that economy keeps increasing the interest rate. So short-term bonds becomes very profitable, lucrative for the investors. Obviously the demand flows towards the direction of the short-term bonds. So the yield from the short-term bond is above the long-term bonds. This is called as yield curve inversion. So I hope now you would have understood. For accepting the long-term risk and the duration, the long-term bonds investor doesn't get enough compensation in this unusual state. The unusual trend of the inverted yield is considered to be a recession indicator. In 1978, it actually existed for 624 days. But now it is still there from early 2022, from past 2 years. When there is no demand for long-term treasury bills or treasury notes, that means long-term lending has become very difficult. There is no demand and reward for the long-term investors, right? Now think from the economic activity or the person who is trying to raise the capital for his business. Is it a good thing for him? Fourth point is debt. US is a ticking bomb with nearly $33 trillion of debt. Debt to GDP ratio is at alarming level. That is at 121%. If you have habit of swiping and buying everything with your credit card and your loan to income ratio is 121%, what would happen? Will you be able to sleep peacefully? As long as the debt holders don't take action, it is fine. This is true with the US government also. But remember, Japan, China, UK, Luxembourg, and list goes on. They're the major bondholders of US debt. Can really US honor the obligation? That is the reason why many central banks have decided to pile up the gold reserve than keeping entire national reserve in USD. Because they're clueless when the bubble will burst. Let me add one more point here. The fiscal deficit in US, that is a state where you're spending more and your income is less. This fiscal deficit is in US from 2 decades. That means government is having more expense and less revenue. Now it is clocked at $1.7 trillion. What about the strategy which is done at apex level? I mean, policymakers to keep this in control? Trust me, you will laugh at this. When Biden is promising to tax rich and corporates more, Trump might go on tax cuts. Both have disastrous consequence on economy because tax cut will widen the crisis, and if they go on taxing rich and corporates, they can shift their base out of US. The great American dream, based on which today's America is built, that economy cannot sell American dream anymore because people trusted this dream. They thought that upward mobility is possible, they can go up the economic ladder, and all this will collapse. People with money always have choice. There are many other countries which are already making red carpet welcome to NRIs and the big corporates. If government doesn't want this, then what is the solution? It may have to keep inflation at a healthy rate where people don't suffer and the growth stimulus stays in an economy. And it has to offer tax incentive and invest more, that is capital expenditure, strengthening the infrastructure in an economy. But I really feel that it is a remote possibility in US because no political party seems to be serious about this. Next point, inflation. See, monthly inflation measured by CPI is just accelerating in US. People are spending in the services, but the demand for the goods and the discretionary spending is on decline. In April, inflation was at 3.5% and Fed has a target rate of 2%. See, I'm talking about a core inflation where the price of the volatile energy and the food price is kept aside. It is not included. Still, consumers are feeling the pinch of rising cost. And many surveys have indicated that it is actually related to shelter-related cost and energy cost. So, these are the main cause of increasing cost. This also has tied the hands of Fed, and the hope of interest rate cut in coming June is dim. Now, ask yourself, how long an economy can afford to keep the interest rate so high? Now, let's look at the question. Is the US economy slipping into recession? Now that we have seen the paradox of all sorts in all these indicators, the relevant question that we can ask ourselves is what is happening in US? Is it slipping into recession or already in recession? What US had witnessed after COVID was a very good vibrant job market and a healthy economic rebound, so which had resulted in little high inflation. Now it has become stubborn. There are many factors which are reason for this, but now the main cause of worry is inflation. To tame inflation, Fed had kept the interest rate so high, economic growth itself started suffering. This phase where economic growth is muted and inflation is high is called stagflation, stagnant period and persistent inflation. Initially, Fed tried soft landing where even if inflation is little high, growth slightly goes down, they can avoid recession. But if the same state is going to continue for some long period, then it will essentially enter into stagflation. The demarcation line between this is too thin. Problem seems to be with the people who are managing this. Fed is trying its level best to avoid the recession, but at the end, with this kind of alarming level of debt, fiscal deficit, leaders who have no long-term vision, what can it do? It is just a toothless snake. After COVID, while pumping money into the economy in order to revive demand, nobody thought that by putting money into the pocket, you don't get permanent solution. You get it by empowering people. Now that inflation is stubbornly elevated for so long, the capital is not at all accessible by individuals and business. Liquidity in the system is drying up. Bonds are losing value. It looks like we are staring at stagflation, rising cost in a sluggish economy. Even the central banks across the world, they started stocking up the gold in an attempt to diversify their reserve because they are losing their faith in USD. Again, gold is seen as an inflation hedge in the world of uncertainty. To give the glimpse of where US is heading, let me tell you, if the debt to GDP is not controlled, then after few years of stagflation, it is expected that debt to GDP can hit 166% by 2054. It will have deep cracks in its economy by then. Remember, stagflation is even more serious. It is worse than recession. If that happens, will it impact NRIs? I know you are thinking what kind of question it is. Definitely yes. There is no doubt about it because this storm can hit entire world. When we analyze the impact, let's analyze it sticking to NRI perspective who are residing in US as well as outside US. If the stagflation, which is worst, recession may be better, hits. The obvious consequence is job loss. The trend is already on the rise. For the last 2 years, a lot of reports are emerging about layoffs. The layoffs are hitting NRIs, high-paying tech industry as well. With AI penetration and the stagflation, tech job opportunities already is in the downtrend, and this may continue in the near term. This is alarming trend not only for NRIs who is currently in the job, also for those who are looking for jobs, the students. For NRI students, decade ago going to US and doing a degree would guarantee their job, their great American dream. But things may change if stagflation continues, recession hits. Only top 10 to 15% of NRI students may be able to get the job without much difficulty. Many NRI students may have to move back to India, that to carrying huge level of debt on their shoulder. Getting into top 5% in your specialization is the only one way to face this. In the US, most of the NRIs are holding visa which is tied to job visa. This can become even worse then. The next issue NRIs may face if stagflation or recession becomes a reality, Fed won't be in a position to reduce interest rate. This will impact your housing loan, your EMI, any kind of loan that you are having. EMI may stay at higher level for long period of time. And obviously in case of recession hits, then trade and business is going to take its worst hit. The US recession or stagflation, it won't just stay in US. It will impact most of the countries around the world. Countries of Middle East like UAE, Saudi Arabia, Qatar, Oman, Kuwait, whose currency is pegged to USD, will have similar impact. Since the US economy is the largest in the world, each and every country will pay the cost with one or another kind of ripple effect. If there is recessionary trend, definitely stock market will be in the downtrend, including that of India. So it is better to have a proper risk management strategies and asset allocation strategies in place. Remember, if you are a long-term investor, you don't have to worry about recession. It may be presenting a huge buying opportunity also, but you should have emergency fund and proper risk mitigation strategies. That's it for today. See you in the next video with another interesting topic. Till then, bye-bye.